Hey there, welcome back to DailyCrest. I'm Mercy, and today we're diving into a topic that's been making headlines around the globe: China's economic situation and what it might mean for the United States. So grab your favorite drink, settle in, and let's break it down. Over the past few weeks, the news about China's economy has been nothing short of eye-opening. From a significant drop in growth rates to real estate woes and pandemic-related challenges, China's economic landscape is undergoing some major shifts. China's growth, which used to be around 8% annually, has slowed to about 3% recently. Real estate companies are facing difficulties after a decade of overbuilding, and citizens are grappling with lockdowns and declining confidence in the government. But how does this economic turmoil impact the United States? Unless the outlook for China becomes substantially worse, the short-term implications for the United States are probably minor. That's Neil Shearing, chief economist at Capital Economics Group. He suggests that China's current troubles might not be a major factor in the U.S. economic outlook for the next 6 months. According to a simulation by Wells Fargo, even if China's economy experiences a hard landing, the U.S. would only see a minor decrease in its economic growth, about 0.1% in 2024 and 0.2% in 2025. But what if China's economic struggles deepen, causing a ripple effect across the global economy? Brad Setzer, senior fellow at the Council on Foreign Relations. An export-based Chinese recovery could run up against a world reluctant to become overly dependent on China for manufacturing. That's Brad Setzer, a senior fellow at the Council on Foreign Relations. He points out that while an export surge from China might lower prices for consumer goods, it could also pose challenges for efforts to boost American manufacturing. Now let's talk trade. The U.S. imports a significant amount of goods from China, but recent shifts in consumer spending patterns, combined with tariffs, have impacted demand for Chinese products. This has led to concerns that China might lean on exports to stimulate its economy. If their demand for corn and soybeans is rising, that's good for everybody who produces those around the world. Roger Cryan from the American Farm Bureau Federation highlights that while this could benefit agricultural producers, there's also the fear of an export-based Chinese recovery affecting the delicate balance of global trade. Beyond agriculture, some American companies might face challenges due to China's economic downturn. Tesla's sales have dipped due to local competition, and Apple's revenues from China are at risk. Banks and tourism are feeling the effects too. I don't expect a recovery in China for us for some time, significant time probably. Glenn Fogel, chief executive of Booking Holdings, emphasizes the uncertainty around China's recovery and its impact on various sectors. Now, let's explore the bigger picture. China's economic struggles could influence geopolitics and international dynamics. The U.S. has been cautious about China's dominance in trade agreements and its impact on American companies. The fact that the Chinese economy is seen as being in a rough spot, that has shifted the balance a little bit. Eswar Prasad, professor of trade policy at Cornell University, suggests that a less formidable China could lead countries to reconsider international lending institutions. And what about the wild card of geopolitics? Could China's economic situation influence its military activities, like a potential invasion of Taiwan? I remain optimistic that the government is still very agile and should be responsive to a potential crisis. Dr. Haiwei Tang from HKU Business School believes that despite the challenges, China's government has the flexibility to respond to economic crises. So, as China's economic landscape shifts, it's clear that there are potential impacts on the U.S. economy, trade relations, and global geopolitics. The story is still unfolding, and we'll be here to keep you updated on DailyCrest. Don't forget to hit that like button and subscribe for more insightful content. Until next time, I'm Mercy, signing off.